Hey, welcome everyone to a special edition of Story Trading. Usually we have our happy hour at this time, but today we got a special guest here, CEO of Biotricity, Waqaas Al-Siddiq. I hope I pronounced that right. So, but first, what's in a stock? Whoa, disclaimer, I skipped by it. Story Trading is not an investment advisor. Investing in securities involves significant risk of loss. This event is being recorded. It will be made available to our VIP members for about 7 calendar days before we post it on YouTube. What is a story trade? Story trading is the art of understanding market pricing through the lens of the 4 pillars of fundamentals, catalyst, sentiment, and technicals. We collaborate now on WhatsApp and on Zoom. We've had great success in our community, and we're now looking to scale that experience into our own app, which is in private beta testing right now. You can sign up for that at storytrading.com and get in the wait list for an invite code. Biotricity BTCY is a VIP pick. VIP picks are trade ideas or investment ideas presented by members of our community. Usually we do that in private Zooms on Sunday nights, and then we track those picks at our website. You go there into the menu bar and you can see a Google spreadsheet. The average VIP pick is outperforming markets by almost 3 times. So you can check that out. We've had a lot of success recently. We've been in the news for a lot of great picks. So we're getting inundated with ideas for VIP picks, and we're streamlining that process with this funnel here, this vetting funnel. If you have an idea that you'd like to present to Story Trading, go to storytrading.com/submit, capital VIP to do that. Now, Biotricity is a VIP pick, which was presented on February 28th by contributor Aaron Warwick. The stock now is, well, earlier today it was 416 when I made the presentation. Not sure exactly where it closed at. Let's see if I can pull that up while I'm talking. So it's up about 63%. And let's see, Biotricity closed at 401 today, so around 60% probably. And in that presentation, actually, the CEO was there. That was a unique situation. Usually CEOs will come later, but he was there in the initial presentation, which was pretty cool. Now, as we said, we look at the 4 pillars when analyzing a stock and trying to figure out if a stock is a good investment. So sentiment, catalyst, fundamentals, and technicals tells us the full picture. Our goal is to be able to look at a stock chart and understand what's going on. Why are people buying? Why are people selling? Why was there a peak up here in the past? Why did it start moving? And by having all this information, you can make better investment decisions. And hey, look, just recently, there's been some volatility in the stock. I know there was an offer, $16 million offering in September 13th, an LD micro presentation, October 13th. I'm curious what's happening here. Maybe we get some answers from the CEO here today. Heavy volume, breaking technical resistances. I believe there was a presentation at LD Micro on October 13th. So maybe there was something in there for those of us who are not at LD Micro. Let's find out. Let's get an update from Waqaas and hear the story, the Biotricity story. Welcome, Waqaas. We're interested in hearing a little bit about the fundamentals of the company and any upcoming catalysts.
Thank you for having me again, Ben. Thank you everybody for joining. Well, I guess let me kind of talk a little bit about the company for those of you who haven't heard about the company or have had the pleasure of looking at our history. So, Biotricity, we're a remote patient monitoring company. We really started out because we saw a gap in the marketplace where, diagnostics is very siloed out. So you've got cardiac disease, you've got sleep apnea disease, you've got, cardiac monitoring, and all of these things are very siloed out in terms of how to perform and whether or not they are part of a broader ecosystem. The other thing that is characteristic of the diagnostic space is it's outsourced, meaning if a doctor actually wants to do a sleep study, he'll write a prescription and send you off to do a sleep study or a sleep lab in a third-party service provider. And many of these service providers are only technology. And what we found was really, it's not just about the diagnostics. 75 cents of every dollar in the United States is spent on chronic diseases. And this is characteristic of pretty much every country in the world. And so really, diagnostics is the beginning, and really you need to integrate with the broader ecosystem to really manage this patient throughout their cardiac journey. And that's where the holy grail is, and that's where the real billion-dollar idea is. And so we liked that. We saw that there's an opportunity. We wanted to focus on cardiac because it was the #1 market and biggest killer, and where there's really was room for a lot of innovation. And so we built a diagnostic device, which is our BioFlux, which is our core product. We launched that in April of 2019. We have grown every quarter since. 1 year of that was, of course, COVID. So that was, a difficult process, but we were navigated very well. And what the BioFlux is really a device that is prescribed to you as from a doctor to a patient. They put the device on, they go home. It's analyzing and collecting all of that data. So it's a smart device. It's a real-time device. Anytime that device detects an anomaly, it transmits it to a call center where you can review, where you have nurses that review the data, determine if it's an emergency, and deal with emergency response if it's needed. And what that does is for high-risk patients, it really saves lives. And that's really what we're talking about here. The traditional market is the Holter market, which is you put a device on a patient, send them home, same kind of workflow. They come back, you take the device off, you download the data. 2 weeks later, you get a report and you hope nothing has happened to that patient. And the reimbursement is substantially different because obviously in monitoring, it requires a lot more engagement and overhead. And so the reimbursement for real-time cardiac monitoring is $850 off of Medicare national average and $150 for Holter. And so we built this product. And our business model is very different because we are a technology company. We don't want to be a diagnostic service company, which is primarily what diagnostic companies do, which is they perform the test. So if Ben here was a cardiologist, he would give a prescription to the patient would come to me, and I would own the technology and do all of it, and then send the patient back with the report. And in that case, the doctor makes $25. So in our case, what we do is we provide all the technology to the doctor, the hospital. They bill insurance, they collect $850, and they pay us $250 every time they use that device as a technology fee. So if that device is used once a month, over its lifetime of 2 years, it generates us about $7,000 in revenue on a device that costs us $383. And so this is a recurring revenue model for us. It's a recurring revenue model for the physician. And this is where we really broke our stride. And now we have 1,500 cardiologists across 23 states that use our product. But where we are really going and what our real vision is, and I'm going to connect it right back to what I started out with, is this idea of following the patient. What is going to happen to the patient? So great, we diagnose the patient. What happens next? Well, the patient gets a prescription, they get an interventional procedure. 6 months later, they're back in the office for a follow-up visit. And they're again on our BioFlux device, or maybe a different type of monitor. And then they go into disease management. And so what we're doing at Biotricity, and I think this is what we're super excited about over the next year, is that every quarter there's going to be a big milestone in terms of our product portfolio. And what we're doing is we're tracking this patient now. So we've diagnosed the patient. We know the patient has multiple issues. So we've made some announcements. We have this idea of a bio kit, which is a blood pressure, pulse oximeter, all of this data, which gets connected and given to the patient for home-based use. They collect this data, it feeds in, and it lets the doctor know, hey, do I need to bring this patient back in month 3, or can I wait until month 4? And that is all reimbursable for the physician, and again, a technology fee for us. Then we have a product called Bioharp, which is going to be announced soon. And that product is really and it's doing what a diabetic has today, which is a glucometer. In cardiac care, there's nothing that patients have for continuous data collection. So you guys have probably heard of a live quote or the Apple Watch and how it collects an ECG. Well, the Apple Watch is a 30-second ECG. So you have to hold the watch with your opposite hand. So if this is my watch, Apple Watch, I'd have to hold it like this and collect the ECG for 30 seconds. And that's what, and that's if I'm symptomatic and I know what's going on. So basically it's pretty much useless for long-term patients. So long-term patients, you need long-term data, because when you try to diagnose a patient, you need 7 days of continuous 24/7 monitoring. And so this product, Bioharp, is basically going to provide a lifestyle tool for patients that have been diagnosed on the BioFlux. So everything that we're doing in our ecosystem is complementary and supplements our core offering. And so I think what is exciting over the next year is, our base story is horizontal growth. Continue to do what we've done successfully in 23 states and 50 states, right? We've got a product that works, we've got reimbursement, a business model that works, and we're best in class. So hire more sales reps, grow the marketplace. And then vertical growth is really executing on our product portfolio and basically selling into our existing accounts. So now we're not going and looking, we don't need to go and find 1,500 new doctors. We sell into the existing doctors. They already have existing patients. And the unique thing here, I think for investors, is that the base business, there's $1 billion opportunity. We're continuously growing. We have a recurring revenue model, and it's a technology play. And then you've got this ancillary opportunity, which will really exponentially grow the company. And we've been very quiet about all of these things for quite some time. And people are like, well, now you're talking about it. Where are you in the development life cycle? How much R&D dollars are you going to have to spend? So what I'll say is all of this stuff is already developed. We actually spent the last 18 months developing all of this stuff. This is basically in the final stages, which is why I'm saying, every quarter you will see a milestone that is going to be product related, designed to sell into the existing network. And so that's a vertical growth on top of our horizontal growth. Now, how there's still a commercialization pathway, how many of those of that market do you grab? What's your percentage of penetration? Those are all things that we will find out over the next 9 to 12 months, and will really make the difference in terms of how big of that hockey stick, or how acute that hockey stick is. And so to kind of give you a concept, so on the Bioharp, and I say that because we're very close to launching this, and we've done pre-orders. This product has already shipped. We've shipped pre-orders for beta people who have gone to the Bioharp site and ordered pre-orders. So we fulfilled those pre-orders, and we're getting close to launch. But so, I wear this, and I don't think you guys can see this properly on my screen. I guess not. The glare is too bad, but I wear this on a regular basis to kind of show you the product that is up and coming. So, this is a produced product. So when we're announcing online or through our press release that, hey, we're about to launch, or we think we're going to launch, we've already got the product manufactured, developed, and ready to go. So at Biotricity, we tend to be very conservative. And so when we're saying something from a press perspective, it's actually a lot further along than people tend to realize. And I think the other thing that I'd like to just address, because a lot of people say, well, you're in technology, you're in hardware, how does the semiconductor issue affect you? We're completely insulated from that, because what we've done is we've adjusted our supply chain so that we're keeping 6 to 9 months of inventory on hand, as opposed to 3 months, which was before this issue presented itself. And the other thing is, we're a contract manufacturer, so we do final assembly. Everything's designed and produced by Biotricity, but the plastic and the board is manufactured. We contract manufacture that, but we're using the 9th largest medical device manufacturer that manufactures for Philips and other major firms, class 2. So we have the ability to mass produce millions of devices a month. Of course, we're always in the lower volume space, but we have that capability. So with that, I'll turn it back over to Ben for any Q&A.
Wow, great. That was an awesome update. I've been a holder of this stock since it was first presented to the community. And I just bought a few more shares while you were talking, to be honest with you. But let me ask you a few questions. Bioflux versus, let me share my screen actually, so you can look at this. I'm a little bit confused about the difference between Bioflux and Bioharp, because they're both talking about 24/7 cardiac monitoring. What's the difference here?
Okay, perfect question. So the Bioflux is a diagnose. You're getting a diagnostic. So you go to your cardiologist. It's a prescribed product. Okay, you need a prescription. You're not going to get access to it unless you go to a cardiologist or electrophysiologist. They put it on you, and they're trying to figure out, what is your issue? Do you have a blockage, an artery issue, a ventricular issue? Do you have an arrhythmia? Do you have an AFib? Do you need ablation? Do you need a pacemaker installed? So you're really diving deep into the cardiac issue or problem that you're dealing with. Now, once you've been diagnosed on the Bioflux, or the result of the Bioflux is you have this analytical report, the doctor reads it, and the cardiologist says, hey, Ben, I'm going to put you on an antiarrhythmic, or you know what, I got to cut you open, or I got to do some sort of cleaning.
But well,
At that
what's it look like though? Yeah, I see an image of the
oh,
Bioharp. Is this also
sure.
something that the patient will take home and wear overnight?
Yes. So
So,
The Bioflex is a reusable device. It's the size. Sorry, I don't have one with me, but it's this. It's the size of a small Apple mouse. It's got 3 little wires that
mhm.
connects to your chest, and you hang it around your neck underneath. And it's got built-in cellular tech, so it's got its own cell phone. And anytime this device detects something that's an anomaly, it'll transmit it. Okay, so it's a self-contained device, needs no cell phone, no nothing, and it's for diagnosis. Now, the Bioharp is a consumer over-the-counter device. Okay, it's not showing ECG. I mean, you can collect rhythm strips for yourself, but it's not showing all of the statistical information for the doctor. It's showing it for the user. So you get to see, hey, when I'm sleeping, what is my base heart rate? What is my when I'm running, what is it? And then you get to track yourself. And anytime you feel something, you can.
So the Bioharp is something a consumer can order directly. The Bioflux has to be
100%.
through the doctor.
Exactly.
Okay,
Exactly.
got it. Okay, got it. Perfect. So you mentioned every quarter you're going to be releasing a new product. Is this all in the cardiac space? Or are you talking about going into other areas?
We are completing our cardiac roadmap. So everything is about cardiac. So the idea is and it also makes a lot of business sense if you think about it, because we've spent a lot of money with the sales force. We've acquired these 1,500 doctors. Each of them have about 2,000 patients, so 3 million patient lives. So we've already got the sunken cost there. So now the question is, what else can we do to track the patient? So everything over the next year is all about cardiac. So we are starting in high-end diagnostics. Then we go into low-end diagnostics, which is our Holter product. Then we go into disease management, which includes the BioKit, the Bioharp. Then we go into chronic care and disease management, which is basically you add in prescription fulfillment, telemedicine, and all of that. So if the doctor wants to, if the doctor is seeing a cardiac patient and the patient is stable and all the patient needs is a prescription, they don't need to come into the office. And everything in our ecosystem is all built in one platform. So you simplified it for the nurses too. Because today what the nurse has to do is, if she's dealing with disease management, she logs into a different portal. If she's dealing with chronic care management, she logs into a different portal. If she's doing diagnostics, she logs into the Biotricity portal. If she's doing telemedicine, she's logging into the telemedicine. So it's a mess. And so we are collapsing everything, which also creates a lot more stickiness and creates this network effect. So, I went a little long-winded there, but the short answer to your question is everything is in the cardiac space, and it's about completing the services needed to follow a patient from the beginning, which is where we are right now, diagnostics, all the way into management and chronic care tracking.
Okay, cool. I'm going to get into the financials in a second. You guys want to stay tuned for that. I think they got some exciting revenue growth going on, right? But if you guys have any questions, please put it in chat or raise your hand and we'll come to you, okay? Before we get into the financials, I wanted to ask you, where do you fit into the ecosystem in terms of like a Teladoc or Dario Health? Are these competitors to you, or would you potentially work with them? How do you see the landscape?
Yeah, a great question. So, so who is Biotricity? And I always try to talk about, we are more closely aligned to Teladoc after they acquired Livongo than anything else in the marketplace. So what was the problem? Why did and people didn't understand why Teladoc paid so much money for Livongo. And the reason is, and this is why we keep growing also, is Livongo is an annuity, it's diabetes. So what the problem with Teladoc was, Teladoc has this telemedicine system. People are logging in, people are using it, but most people are using it for basic visits. So, your kid has a fever, you have a rash, you're not a recurring user. So their retention rate was horrible. So what they needed retention. Well, retention means chronic conditions. Livongo had 228,000 diabetes patients in one network. And so Teladoc went and acquired Livongo because that made sense that, hey, many of these patients need follow-up visits, and now I have an annuity, and now I have retention rate. So Biotricity, we started in the diagnostic space very much like Livongo, where they created a glucometer, and then they went into disease management. And we started in diagnostics, and now we're going into disease management. and we've integrated telemedicine into it as well, so we can also do the follow-up. So we are very closely aligned, but we're in the cardiac space and they're in the diabetes space. So we're very complementary. We could certainly work with, a Teladoc Livongo type story. Dario is another example that's like in a parallel industry, much smaller because, they're coming in and they're trying to follow the Livongo story, and they've done a great job. But they came in like, I think 5 years after Livongo had already grabbed a bit of the market share. So, there's a massive market in the diabetes space. So we can work with, the question for us is, do we work with a big guy like, Teladoc, Livongo that may or may not pay attention to us until we're bigger? Or do we work with somebody like Dario, who's also really building an ecosystem and doing that? And then we can work and we have the same kind of mission. Or do we work with somebody in the middle, right? That's a little bit bigger, but not as big as Teladoc, Livongo. So those are the things that we're, of course, going to look at over the next year. We've got a lot on our plate. And the great thing is, like, if we just execute on what we're doing and on our products that we have, we're already going to be, we'll be a company that you will not recognize in about 18 months.
Sure. Well, that's fun. I'm a big shareholder in Dario. I just had dinner with Erez last week. I would love to see you guys get together if it's possible. That'll be a lot of fun. That'll be a lot of fun for me.
Yeah, sure.
So
and they're doing a fantastic job in terms of, like, they're also doing the disease management, right? They started in the same. The difference is these guys, both Livongo and Dario, actually, they came in from the glucometer, which is patient home-based monitoring, right? And then went into disease management. We started from diagnostics and went to disease management, but it's completely the same strategy, just in different industries.
Cool, exciting. Let me get into some numbers. Last time I talked to you, let me see, I got a little spreadsheet here. We were talking about like quarterly numbers of $1 million. You were telling me like the quarter ending June 30th, you were forecasting around 1.7 million, or maybe that was my own forecast based on some stuff you told me. And now I'm looking here at Yahoo Finance. It's showing me the current quarter estimates 1.9 million, next quarter 2.4 million. And then all of a sudden I see next year estimates by the two analysts covering you at 22 million, which would be like a threefold increase in revenue from this year to next year. Is that like 9 million this year to 22 million next year? I don't know what you think of those numbers, but is that accurate? Are you growing this fast?
So we're growing very fast. I mean, analysts have their own kind of adoption curves that they use based on where they see and how effective that they see product adoption is going to be. I'm always conservative by nature. So as I kind of alluded to, when I issue a press release about a product, it's usually because, I'm way beyond getting ready to produce it, right? I'm very deep into it. But in terms of the numbers, what I can say is we did triple-digit growth last year. We did triple-digit growth this year. We will do it next year and the year after.
Wow. That's a big thing.
Yeah. So that's the focus, and that is how fast we are growing.
Amazing. And then, so how are you getting adoption of this? I know, like with Dario, I'm a little bit more familiar with their sales channels and what they're trying to do with employer coverage and insurer coverage. What's your strategy? We get this new product. How does it actually get pushed out to people?
The Bioharp product?
Yeah, the Bioharp, and then the subsequent products you're going to be releasing.
So we have multiple channels, and we're playing around with all of them. So we've already done a direct marketing campaign to understand. So the great thing is that we've got a lot of data. That's another thing that is like very valuable in this company that, people haven't really attached much value to. So, tens of thousands of patients have been on the BioFlux. They sleep with this device. I know everything about them. And their age demographics and whatnot. And so based on those demographics, we went in and we did an analysis on what is cost of acquisition for similar type of individuals to go and buy the Bioharp, and does that work? So we've done a digital marketing. So digital marketing works for us for a Bioharp product as well as for our BioKit product. So we can actually just digitally market and bring a lot of people into the ecosystem, which is very beneficial, because what's actually going to happen is if someone buys the Bioharp, we know that that person is a candidate to become a patient of a cardiologist that sits in our network, because they're buying it because they're interested in the heart or they have a heart issue. So eventually need diagnosis as well. And so it's really, and we looked at the channel for two reasons. One is as a feeder, so we could feed more patients into our existing cardiology network and grow that way. And that'll augment our horizontal. The other thing is we've talked to our cardiology network. They want to recommend this product to their patients. They're recommending AliveCor and these other types of issues, and they're saying that they don't find the value in those types of devices. But for patients that are worried and they don't have anything else, that's the only product that's available. So we have an existing channel that we can sell through our existing clinic network, and they can sell into that. And then with the BioKit product, it's the same concept, right? We can do digital marketing by using the data that we already have in terms of patient demographics and going after and capturing more of them. And the other approach is to sell within the existing network and bundle it, right? Because when you bundle it, it becomes more attractive. It's also better for the physician, because now instead of a patient going in and messing around with another vendor, collecting those devices, bringing that data in, it's all centralized and into one place. So yes, the patient can consume the data, but when they take that reading, so to give you an example, if somebody buys the Bioharp, who's also a patient of a cardiologist, that Bioharp data, if they ever want to share it, it gets plugged into our same portal. So the doctor can consume it in the same portal as opposed to having to go and log in somewhere else, provided the patient gives them access. So that makes it much easier, and also why the doctor, another reason for the doctor to actually recommend using a Biotricity product as opposed to anything else.
And I may have missed it, but how do the doctors know about this? Are you directly selling it to them, or do you have relationships?
Yeah, so we have a direct sales force. Sorry, I didn't mention that. So we have a direct sales force, and that's kind of our third channel, right? So our sales force is focused on, broadening. It's that horizontal thing, right? Hire more salespeople, open up more accounts, and then we sell into the existing accounts. So technically, that's a third channel for us in this product, because now when we release a product, the sales rep isn't just selling the BioFlux; they're selling the ecosystem.
Okay, so do you have like any kind of catalysts out there that could take you to the next level? Even you're talking about triple-digit growth. They're like in the case of Dario, they're trying to get, and they've been recently successful in getting national healthcare plans, national employers, which really are good for their margins. That they're going to be selling, the product for them. They don't even have to spend $1 on marketing in some of these deals. Are you looking for anything like that? Does that fit into your sales model?
Yes, 100%. So we're working with a few actually employer-oriented plans, as well as corporate-oriented, like corporations that are actually using some of these, not HR, but healthcare type conglomerates that are providing healthcare services. They're basically operating healthcare plans for corporations, as opposed to just a specific insurance company. So we're looking at both of those, and over the next 6 to 9 months, we're running a couple pilots with them and showing them efficacy. The other great thing now is that anytime anybody wants some sort of data, we have such a big network ourselves that we can just go in and say, oh, okay, you want to prove this on 500 patients? Oh, great, you have 50, no problem. I'll give you 450 patient data myself. And so that becomes a lot of these employer-based plans, like they want to collect data, they want to do a pilot. What's made us very powerful today and over the next 12 months, I think is very exciting, is that an employer, they'll say, okay, well, we want to see what is the cost savings, but we need to see it in a wide enough demographic to make it statistically significant. And we can actually accelerate that, because we can call up 20 doctors and be like, hey, we are doing this employer plan thing. We've done very well. You've done very well off of us. We're going to give you 100 free units each. Can you please put 100 patients on this, so that we have 1,000 patients that we can then compare the data for? So go ahead.
Sorry, and what about like a national healthcare plan, like a Aetna or a Cigna or something like that? Does that fit into what you're looking for?
Yeah, 100%. So we're trying, right now we're talking to a few of those plans, and what we're trying to focus on is a national plan that is, so some of these plans, I don't know how familiar you are with them, they're actually bifurcated within regions. So it's like, Blue Cross Blue Shield is a unique one, where like their southern region Blue Cross doesn't communicate with the other region. Like they all have their own, it's actually, the country's actually divided. So even though it's the same brand, they all have their own internal decision-making trees and whatnot. But yes, that is definitely a part of it. The healthcare, national healthcare plans, the insurance like United and Blue Cross, they're slower moving, like Aetna's and whatnot, compared to the employer plans, because the employer plans want to cut costs and they want to create better benefits for the employees. So we're trying to basically straddle both of them, and hopefully the employer pilots will end up early, so that's another data point for the insurance.
Okay, great. So what are you looking forward to here in the next 2 to 3 years? Is there any kind of optionality upside, that anything you haven't talked about yet that might come to fruition that can really take your company to the next level? Are you looking at anything like that, or is it just slow and steady growth?
Well, fast and steady growth.
Fast. Sorry. Fast
Gotta
and
be
steady
fast.
growth.
Gotta be fast.
It's very fast. Yeah. Triple.
Yeah. So what I would say is, like, what I've mapped out and what I'm very excited about the next year is really executing on our product roadmap and basically completing this cardiac journey. I think what is going to make the big difference, and I think that this is where investors, if they're paying attention, they would say, okay, I'm going to put all my chips on the table, as they say, right? That's going to be really a result of what is the penetration, right? So we've got these 3 million patient lives. The numbers become astronomical if the penetration is very, very aggressive, right? Now, the question is, what is that penetration rate? Is it going to be small? Is it going to be medium? Is it going to be massive, right? I'm optimistic that it's going to be on the higher end. And so I think that is the thing that is really going to be a game changer for the company. And we should probably see some of that come to fruition over the next year.
All right, cool. All right, I just have one final question for myself. So if there are any questions from the community here, go ahead and raise your hand or put it in chat. So here's my final question. I kind of hinted to it early on, but did we miss something at LD Micro? Like, there's huge volume here. Is there something new? I didn't listen to LD Micro myself, so maybe it's something that's already out there, or any insights into what's going on?
For sure. So look, big part of my job is talking to investors all the time. And I think there's a couple things that, so we've been talking about our story a lot, right? And I think for the last year, during COVID, people didn't know if we were going to survive. And then people realized that, hey, this company continues to grow. Okay, well, how do they really grow? Well, then they need to be capitalized. So a couple of things kind of lined up together. One is that we got capitalized really well. And so we have enough capital to execute on our plan. And we did a straight common deal, no warrant, right? So again, people thought we would do a warrant deal. We did a straight common deal, which protects all open market investors. So as soon as that happened and it protected open market investors, there's a lot of funds and a lot of big players, family office that I've been talking to. Some of them actually even came into the deal and they didn't get the size that they wanted.
Okay.
And so, and then LD Micro, I met with a lot of large investors as well. So LD Micro was a very big event for us as well. So I think that there's multiple aspects that came to fruition that basically have driven a lot of interest in increasing positions.
That's super helpful. I am so glad that as a CEO of this company, you're willing to be transparent about your interpretation of what's going on with your stock. It's very important for us to kind of understand what's going on. And really, I thank you for being transparent about your thoughts on that. That's great.
And I also, and I think that another thing that is kind of, I invested in the last transaction myself personally.
Oh, very nice. What was the share price on that?
$3 a share.
Okay, cool.
So I invested myself personally. I've never sold a share. I'm the one of the largest shareholders. So all of that, like I said, combined with really focusing on bringing in funds and bigger family offices into the company and to pay attention to the story. And being capitalized to execute on the plan makes a big difference, because everybody can have a great plan, a great story, great traction, but well, if I had to go hire 25 more sales reps and I don't have the cash to do it, I can't really grow.
Regarding that cash and the runway, how long does that take you for, that runway? Or do you have enough to get to profitability at this point?
We do, but we will, so profitability or growth, right? So it's always
Right.
this
I
question, right?
understand.
Uber's not making money. So the thing is, what I would say is that we have enough capital to get to profitability, but before we become profitable, we'll go through another cycle of growth and go back into the red. But I would say that, to put it in context, we spend $12.5 million a year, and our revenue run rate is 8 million. So our deficit is 4.5, and we raised 16. So we have a lot of
awesome
cushion there.
Perfect. All right, great. So that's all the questions I have. I don't see any more coming in. So just want to remind people, well, I have a couple slides to go through. So if you guys have a last minute question until we get to the end, you can throw it in. But I want to remind people, in StoryTrading, we have a Biotricity research group. If you're a VIP member, you can access that and we can collaborate there on Biotricity. We have lots of events coming up. You can go to our website and check that out. Follow us on YouTube and on Twitter. And with that, I do not see any other questions. So Waqaas, thank you very much. Were there any final comments you wanted to leave us with?
No, I think the last thing that I would say is that, I think one of the unique things about Biotricity and things that people miss about us is we're really a recurring revenue technology company that happens to be operating in healthcare, not a diagnostic services company. So we're very insulated from that. We're insulated from reimbursement issues because of the way our business model works. And so every product and every technology that we talk about is always the same model. Give the technology to the doctor, hospital, generate a revenue stream for them, and then generate a technology fee for us. And this is why we have basically 100% reorder rate and basically 100% retention rate. And so when you look at us, you take our last quarter and multiply it by 4, that's our worst case.
That's beautiful. That's what I love. That's why I invested. I remember that now when I was looking at this originally, and I really do like that aspect of your growth profile or financial profile. So excellent. All right. Thank you very much. Hopefully we'll keep track, and we'll see you again in the future for an update.
For sure. Looking forward to it. And thank you for the invite. And thank you everybody for joining.
Great. Thank you. And for VIP members, we're going to turn off the recording here and we'll have a chance to collaborate together. Thank you very much, everyone.